Welcome all to the first of two Focus on Research sessions. This one's going to be on the rise of contact card payments. So my former colleague from the Bank of Canada, Huynh, will be giving a 20-minute presentation?
Sure.
20-minute presentation, and then we'll have a 25-minute discussion about the results. So just to give you a little bit of background, Kim is a senior research advisor at the Bank of Canada in the currency department, and his research focuses on understanding the use of means of payments at the point of sale. So 20 minutes to you.
Sure. Thanks, James. So thanks a lot for coming. And then if anyone here is for the blockchain session, you're in the wrong room. Anyways, well, thanks a lot for coming. So the title of the talk is different from what you have in your program because I did not have enough room for debit and credit card. So anyway, so before I start, I want to say that the views expressed in this presentation are those of mine, and no responsibility should be attributed to the Bank of Canada. So I want to be very clear. So actually, a lot of the materials in this presentation are drawn from research completed by many colleagues at the Bank of Canada, and I think it's very useful to what I do these presentations because I try to put everything together and try to provide a big picture, and then kind of a roadmap of what type of research we want to do. And so that's the reason why we do research, is that we want to understand payments. The Bank of Canada, we're the sole issuer of cash or banknotes in Canada, so we want to make sure that we're doing it in a very efficient way. And the best way to do this is to understand the market, understand our users, understand why people are using cash. So the title is a bit provocative, and I'll show you why. Okay, but before we start that, let's do a survey, because I do surveys for a living. So could you answer the survey? What payment method did you use at the last point of sale transaction? Okay, so your last transaction you undertook, what did you use? Okay, and everything's coming in. Okay, let's see. I think there's more than 9 people here. Why is there a non-response? Are you afraid that? Okay. I still think there's more than 11 people in this room. So you don't have an app? BlackBerry users. Okay, so that's okay. So that drives maybe So of the BlackBerry users, what do you use? Credit. Credit, credit, credit. Okay, so if we were to look at this survey, 80% of the persons in this room are using credit at some form. There's some prepaid cards. Few people are using cash. So this survey is it's a fun survey, but one thing that I always say is that this survey is not representative, right? We're a very different segment of the population than what is Canada, right? Or the national representation. So what we try to do is, there's a lot of what I call, I don't want to use, there's preconceptions, right? That the end of cash, that we're going to a cashless society. But what we'd like to do is show some facts behind this. And I'll just give you a high level explanation of what I'm going to try to do in this presentation. Okay, one fact that we established is that cash at the point of sale has decreased, right? And especially for the volume of payments. So what we call micro payments, anything under $25, the volume has decreased. However, there's still certain demographics and certain type of transactions that still use cash. And then we ask the question, well, why do people still use cash? And the attributes we find in our survey that people respond positively to using cash relative to payment cards, such as debit or credit, is that it's easy and convenient to use. It's low cost. It's universally accepted, and that for security reasons. Okay, but in the last few years, contactless payments have increased in terms of volume, especially. So you can see this basically graph, right? So the Bank of Canada, we've done 2 surveys, these what we call method of payment surveys in 2009 and 2013, in which we asked consumers to basically record on a diary over a 3-day period what type of payment method they use. So blue is cash, orange is debit, so a lighter orange is credits, and then store value cards are green, and light blue is check. You can see I'm not a fashion consultant, right? I can't even get my colors correct. Okay, so what do you see from 2009 versus 2013? You can see that in terms of volume, cash has fallen. And then what's taking this market share? Well, you can see the credits, right? Credits increased. But in there, you can see we do a light shading for contactless credit. So you can see just contactless credit taking off, okay? And at the same time, if you look at debit, right? So contactless debit was introduced around 2011. Contactless credit was around 2008. You can see contactless debit, it has increases its share, but relative to contactless credit, it's not as, sure, thank you. Yeah. So you can see contactless credits, this bar here in 2009 relative to 2013, there's been huge growth, right? And debit is not as high. You see some growth in prepaid cards, okay? So in terms of volume, right, what we call these micropayments under $25, you can see contactless payments crowding out cash. However, when you look at value, it's not the story for cash doesn't, the decrease for cash is not there. It's stayed relatively flat. And then what you really see is contactless credits taking a chunk of it. And what do you see here? Well, it's at the expense of, what I would say, debit, okay? And what we're going to try to do in this talk is to explain these factors. So one way to do it is to think about this by demographics, okay? So, so income and education are usually very good predictors of cash usage. So here's an infographic. It's always great to see your research been taken and then put into the press. So I got this infographic actually from the Globe and Mail. So you see here in terms of income, okay, the red dot is low income, gray is a high income, and again, darker gray is medium income. You can see for low income, for all income classes, right, the usage of cash in terms of volume has decreased. And you can see, even for low income, right, from 60 to 52, 56 to 45, 48 to 35. So you can see in terms of volume, okay, income is a strong predictor of decrease. In terms of education level, again, the steepest gradient is for those with slightly more education than high school. Okay, that gradient's. And then you see university, it's falling. So in terms of demographics overall, the usage of cash is falling in terms of volume. Okay, and that kind of is confirmed by the previous graphic that we had, right? Volume, cash is losing ground. So these are the two main, I would say, social demographic characteristics. There's also age and rural versus urban and provinces. If you want to see the breakdown more deeply, you can access our survey reports. It's online. Okay, so here's something else from our survey reports. So we see volume decreasing a lot, okay? And you can see the biggest drop in volume, okay, you can see is in groceries. No, not a big surprise. More grocery stores accept contactless payments. And travel and parking, right? So people, you can see this large drop in terms of using cash for parking. But on the meantime, okay, so that's the volume side. This is the frequency of transactions. But in terms of the value of transactions, it's actually increased for healthcare. Okay, so from 10% to 16%, and for professional services from 12 to 25%. So this kind of has what we call, a kind of paradox, right? So people are using cash less for small value transactions, but for some reason, for high value transactions, they're actually using cash more at a certain merchant class, such as healthcare and professional services. So I'll try to give some reasons behind that later. And it relates to what we call another project we're undertaking, which is the Merchant Retailer Survey, or the Cost of Payments study. Okay. So, so is Canada unique? So what we did was, in this Bank of Canada review article, we compared Canada versus Australia and United States, right? Countries with very similar market structures in terms of card payments, card usage, card ownership. And you can see, roughly Canada's right in between. Canada's right in between Australia and United States in terms of volume. Okay, Canada still has a large value share in terms of cash. The total, the average value of total payments, it's the lowest, right? But the average value, and it also has lowest average value of cash payments, $18. So, people from Australia and United States always say, Canadians are cheap, right? We don't spend that much. Maybe that's the reason. But if you took a look at the ratio of cash share versus P2P payments in terms of volume, actually it's pretty high in Canada, so 69%. So we thought this was an interesting feature, right? Because this is what's, kind of a lot of people are talking about at this conference, right? Mobile apps, all these things they're to enable people to transact values. And so that was one of the attractive features of cash, right? So James and I, we go for beer all the time. So, I always pay, and then he pays me back with cash because he doesn't want his wife to know that he's been out drinking with me. So there's that feature of cash, right? The anonymity feature, which is always very useful. Okay, so the average P2P payment in our survey is about $30 Canadian. In the United States, it's $35. And then in Australia, it's 98. So Australia has a very high P2P. And when I talk to people from the RBA and I look at their survey report, one thing they report is that they have a lot of communities which use cash to make transfers to each other. And so at some point, people report like regularly transferring $500 Australian dollars to each other. Okay, so let's summarize. So what do we have so far? Cash is being used less in terms of volume. Value stayed roughly the same. One of the attractive features of cash is that it facilitates P2P payments. Okay, so now let's look at the attributes behind this. So I spoke about ease of use, cost, security, and acceptance. So in our survey, what we ask consumers to do is to rate on a scale of 1 to 10 how they feel about these features. And then what we do is take a ratio of cash relative to these cards. So you can see the number one reason why consumers report using cash or they perceive cash positively relative to cards is because of cost. Okay. Then the second feature is security. Then after that, it's acceptance. And then after that is ease. So this is not surprising, right? So one of the reasons why contactless payments especially were introduced, right, chip and pin, all these features, was to basically make it easier to use, right? You see more and more terminals being used everywhere, so acceptance is high. Okay, so these factors are not as predominant in consumers' perceptions on why they use cash. Rather, it's cost and security. Okay, so now let's try to, those were what we call subjective measures, because we just asked people. Now let's try to get some objective measures in terms of speed, right? So again, remember speed was was still positively rated towards cash, okay? but let's see, does this bear out in the data? So as part of our cost of payment study, overall big research program for the past few years, we did a retailer duration study. What we did was we contracted a survey company to go into select merchants that were typical of the retail space. And we asked them to go and observe how long each payment took. And so once we did that, we processed the data and we calculated the median transaction. So what does it come out? Well, cash is the fastest payment method at the point of sale, about 12 seconds. Then contactless credits is 15 seconds. Contactless debit was a little bit higher at 16 seconds, but when you take into account the confidence intervals that we compute, they're roughly the same. And then debit chip and pin and credit chip and pin are roughly the same again at about 24 seconds. So relatively, you can see that contactless is catching up to cash, right, in terms of the speed. So that's why you see in the data, the ease of use is not as high. Ease of use is not one of the major reasons why consumers state why they use cash. Okay, so it's always good to verify, our consumer perceptions in line with objective information. So in terms of security, right? So we know cash. There used to be a big counterfeiting, large amounts of counterfeiting in Canada in 2004, but in the past few years, it's gone down. It's actually below 10 parts per million now. With introduction of chip and pin for both debit and credit, fraud has gone down at the point of sale. So the security concern has been increasing, and several people discussed this at in various sessions, especially at the FinTech Cup. Do you remember Ninja, that mobile app where you can basically accept payments, right? The question was asked, and he never answered it, was, what about card not present fraud? And you can see the reason why, right? Card not present fraud has actually been increasing. So it's blue, right? It's been increasing since 2006 all the way to 2013. And this is from the Canadian Bankers Association. And then cross-border counterfeits, okay? So that's one of the major reasons. Again, card fraud, credit card fraud. So all these data breaches that people talk about, it's very hard. It's again hard to ask in a survey objectively. Well, were you subject to a data breach, right? You don't get everyone, and again, it's not something observable all the time. It's something, a perception at the back of people's minds, and that's why I think you see in the survey results, right? That you see why security is high as a reason why people still prefer to use cash relative to cards. So in terms of adoption of payment methods, you see that almost everyone has a debit card. About 4/5 of people have credit cards. But if you look within that, so debit cards may be ubiquitous, but the contactless feature is only 1/10. Okay, and again, there could be various factors why it has such a low uptake relative to credit, right? Everyone here, does anyone here not tap? Everyone taps. Oh, there's one person in the back. Why don't you tap? Yeah, exactly. Sure. So I made that joke yesterday. With Ninja, I should be able to just go around and start skimming everyone's card. So anyways, so credits, almost half the cards have contactless. Again, with prepaid, the same thing. Prepaid, half the respondents have a prepaid card. And of that, half of them have a contactless feature. About 30% of people have an online account, and a little bit less with Interact Online. And then we see this in the data in 2013, about, I would say, 8% have a mobile app. So even though people are talking about adoption, right, it's great to have this conference and people talking about these disruptors and everything coming on. Right, if you look at the objective information, again, the innovations, right, they haven't taken over. So we might be wrong in the future, right? So that's why we'll probably do another survey. But I always think that it's useful to get objective information to see what's happening. Yeah. So I'll ask a follow-up question. Do you pay their bills? So I think what you should do is decouple that. You should make them pay their own bills. So actually, it's very useful. People in the United States, they show this. Kids, when their parents give them a credit card in the United States, they tend to use credit cards because their parents pay the bill. But when they have to pay their own bills, which is their debit card, they don't use it. So the bank cards. Well, either way, whoever is funding that account, right? So you are funding the account. So you should do that as an experiment, right? And see what their usage, or what their tap is. Okay, so that's the adoption of payments. So what I thought I'd do is now show some research we've done. So in 2009, right, contactless is just starting to come out. So then we asked the question, well, how is this going to lead to the usage of cash? And so in 2009, we did the survey, and then we used statistical methods, and then we found that within the group of respondents that actually adopted the contactless feature, contactless credit, there was a 10% decrease in cash. And again, I didn't rig the numbers, right? We did the research in 2009. It's actually relatively very similar to the result we have from our survey data in 2013. So to further track how contactless payments are evolving, we use another alternative data source. I don't know if you use it. It's run by Ipsos Reid. It's called the Canadian Financial Monitor. There's a whole section on payment usage. Okay, and we basically did a study, and we find that it's a 3% decrease in cash. So how do you reconcile a 10% decrease in this study, which is from one cross-section, one point in time, and then a 3% decrease over a longitudinal surveys? So one of the reasons why we show in this paper why the numbers don't line up is that it's the composition of the respondents. So just imagine, right? Who are the people using contactless? They're very young. They like to spend their time doing other things rather than filling surveys, right? Whereas this Canadian Financial Monitor, it's a very onerous survey because it gets a complete picture of people's banking habits, right? Mortgages, all this. So once you account for that compositional bias, that's one of the things that basically explains this discrepancy in the two numbers that we get. Okay, so throughout this whole research program, right, we try to really understand this impact on cash. So the pictures I've shown you, right, it's very much been this teeter-totter, right? Whatever happens in contactless, right, reduces cash. So it's not really a two-way teeter-totter. I don't know. Do you ever go to the playground now? A lot of playgrounds, they have these three or even three-way teeter-totters. Do you ever try to sit on them? Right, especially with small children. Right, they always want to do that, right? The small children, they see you're bigger. What do? They sit on it and they jump on it, right? And then the way you move is then basically who's the bigger child, right? Or who jumps the most. So this is the idea that innovations, right? They may displace cash, but they also may be displacing other innovations. And so that's why when we did this study, we found this result, right? That so even though innovations are crowding out cash, right? Contactless credit is also crowding out, debit cards, right? Or other like checks. Okay, so this is a picture I got off the internet, right? So whose wallet is like this? Right, of course you have your bank cards, your credit cards, you have some cash, you have your coupons and receipts, you have your health card, you have your gift cards, you have your loyalty cards, right? Like, Who has a very slim wallet? Who just? So you only have one card, 2 cards? How many cards do you have? Who has only one card? Raise your hand. 2 cards? Okay, so it's probably your ID and the credit card, right? Okay. But relatively, we found on average people hold 1 debit card, 2 credit cards in their wallet, and about 0.8 prepaid cards in our survey. So some more data for you, just to see in terms of, what's the median transaction that people undertake. So you see in 2009, the median cash transaction was $8. In 2013, it's $9. Okay, debit contactless didn't exist, right? It'd be pretty absurd if I put a number up there. But it's $14 in 2013. In 2009, the contactless median contactless transaction was $43. You can see by 2013 it's 20. So you can see this crowding out feature, right? So credit's basically displacing cash, but it's also, invading the kind of space that the Interac is working in. Right? So I only talked about cash, debit, and credit and prepaid cards. But from this conference, again, this is a dated slide now. There's a whole bunch of other choices out there, right? I could fill this whole slide. Okay. Actually, even the Bank of Canada and Payments Canada is introducing a new payment method. Maybe wholesale, right? But at some point, I could do a bill payment for James, and you can pay me with a cat coin. Okay. So that begs the question, right? So are these innovations, right, are they user-driven or are they merchant-driven? So I got this from the TSI report. Views only and not the views of the Bank of Canada. Okay, so this is from the TSI report. So the purple line is the number of terminals, contactless terminals. The green is the number of users, and then they do a forecast. So in the literature on innovation, everyone talks about the S curve, right? So if you have an innovation that takes off, you should get an S, right? So in terms of both from the consumer side and merchant side, right, it's not quite an S. It's slowly, right, evolving. So the question begs from this picture, is this driven by the users or is it driven by the merchants, right? So imagine in 2007, 2008, right, they announced, okay, we're going to have this contactless feature. So who do you think adopts first? Is it the merchants or is it the consumers? Right? So this is the classic chicken or egg problem. And so anecdotally, you hear stories that MasterCard, to promote PayPass, what did they do? They gave incentives to their consumers, right? Their customers to tap, right? So if you tap 3 times, you got $20 or something like that. Okay, but at the same time, we also know that on the merchant side, they probably approached, merchants to, hey, maybe you want to install a contactless feature on your terminal. And so you can see that it's starting to increase. And so the study that we looked at is roughly around 2009 to 2013. So I think the survey evidence that we did relative to the aggregate data, it matches up. So this is what we call an external validity check. But I think it's still important for us to do research, right, to really answer this question. Right? Is it user-driven or merchant-driven? So a lot of the research I've shown you so far, it's all about users. Okay? So in 2006, we did a merchant survey where we asked about the cost of cash, debit, and credit. And the answer came out was that cash is cheapest under $25. Okay, then after that, it's debit. Okay, and you can see credit's always the most expensive. And this is for the merchant. So this is in 2006. The data is, there's been a lot of innovations happening during that period. So we really want to understand that. So that's why we undertook what we call a total cost of payments survey. So not only are we asking merchants, we're asking financial institutions, we're asking cash and transit companies, okay, we're asking the mint, we're asking everyone. So that at the end of the day, we can ask, okay, what is the true cost of payments, right? We all have our own private costs, right? I have a private cost, the merchants have a private cost, the banks have a private cost. But if we wanted to do, decisions on how much cash we should print, right, or distribute, we should really understand what the social costs, right? So that just feeds into what we call our whole research program, right? So it gets, this bubble, right? So I kind of live in this box here, looking at adoption and usage and cash, right? However, now we're expanding, right? I've been working more, looking at merchants and banks. And then there's other parts of the team, right? They've been thinking about other things like e-money and cryptocurrencies, right? And thinking from a central bank point of view, should we issue it? Well, should we regulate it? And then e-payments, such as e-transfer, right? And then what are the implications? So it's a pretty fun time to do research in this area, right? I don't have to just live in this box anymore. I can expand, right? Maybe afterwards I can ask someone at the blockchain, should we do this? On this experiment? I don't know. Again, so thanks a lot for your time. We have a booth here, so feel free to come by, ask us questions. We can give you more texture on some of the research. And as always, all of our research is available online. If you go to this website, you can get all the reports that we have written. Look it up, and feel free to ask questions. Yeah, and I'll end it there.
Okay, thanks. I have some time for some questions, and as the moderator, I will have my prerogative to ask the first question. So my first question is looking at the two infographics you have on education and income, and the adoption, how that changes their use of cash. I'm wondering, is there a hidden variable there? Because credit cards have credit, so you see highly educated users, high income users are more likely to have access to credit, so they can use credit cards. So is it a possibility that some of this is being driven just by people who don't have access to credit, and that's why they're not using credit cards?
Yes. So
or they're using cash, I should say.
Yes. So this is what we call just very rough, data. So this is only conditional on income on the left side and education on the right side. More deeper analysis is usually done by what we call these discrete choice models, where we condition on everything, where we not only look at income, education, but age, marital status. We also look at if people have rewards cards, right, or if they use it actually as a credit facility, which is revolving. And there, the message gets very nuanced, right, because there's many interactions between this, right? You can be young. There are some young people who are financially constrained, right? That's why they use debit and cash. There's those who are not, so that's why they use more credit. At the same time, there are some people that really like the rewards. That's why they're driven to use credit cards. There's those who don't care about rewards, right? They use it more as a record-keeping device, so that's why they use cash or debit. So it's always hard to show this type of multivariate analysis. In our reports and publications that we have, we actually try to give some of these visualizations of these what I call usage curves. And again, we try to, it's not perfect, but we try to classify people into different categories, right? There's those cash-intensive users, right? Cash-intensive users tend to be a bit, older, less educated, live in less urban areas, and they tend to use less cash, whereas people who are using a lot of credit card transactions, younger, higher income, and have more education, and they tend to use credit more. So, but it's nuanced, and I get that. But just for the Globe and Mail, right? I'm not allowed to use a discrete choice model in a newspaper article. So.
Exactly. Okay, so question?
Quick question. I know you're focusing on contactless cards, but I was talking about an earlier slide, I think the one before this one, that showed that checks are pretty steady over that time period, both in volume and in value. Were there any particular insights on why sort of contactless cards had sort of shrunken or had an impact on checking?
So I think what happens, well, in terms of volume, it's very low still. It's still very low, but I guess at the end of the day, it's steady, right? It hasn't been killed off. Sorry.
We all would like that, but I know that.
Sure, but digital check capture now. So I'm a big. So I admit to this. I'm a big abuser of this. So I have two bank accounts, right? One has a very high interest rate, and another one where I do all my accounts. So how do I transfer value from one to another? I don't do e-transfer. I write myself a check, and I go and digital capture has been great because I do all my transfers that way now. I don't go to a teller. I just go late at night.
I just find it curious that there hasn't been, when we talk about the impact on cash
Yes.
From contactless credit cards, it just doesn't seem like there's been much impact on check usage. I'm just curious.
Yeah. So this is where I have to really now put myself out there. So a lot of the check usage is usually used when we look in the survey to pay for professional services and cash too, right? So just imagine you're a one-person chiropractor. You have a practice. People come by. You have to pay $100 for this treatment. What's the cheapest form of payment? Cash or checks, right? If you know the person, checks, right? And so that's why you see. That's why we ask that question, right? Is it cost-driven, right? So, and when,
Kind of segue into a follow-up question, if you don't mind.
Yep.
There's still out there a pretty healthy underground economy where cash is still king. I mean,
Yep.
does that kind of play into your analysis as well, in terms of why cash is still big? And again, I don't think your research probably looked at the underground economy part, but I mean, that could be another driver for why people are still using cash too.
yeah. So in this last survey, we asked the question. So our survey is mostly focused on point of sale or transactional-based demand for money, but there's also store value. And so we knew this, so we split the cash withdrawal, or how much cash in your wallet. And so the infographic usually tells us that on average, people have about $84 of cash in their wallet. Okay. But we asked another question, right? Not in your wallet, at home or anywhere else, like i.e. safe or whatever, they report about $300. So we do this kind of extrapolation exercise. Hopefully we can release this report soon, where we do denominational analysis of what is in people's wallets. So we find that roughly, and don't quote me on this yet, so we have to release the report, but it's not that, it's a trivial amount of the total notes in circulation. So roughly there's about $70 billion in notes in circulation, and the amount in your wallet is a very small amount. I'm not going to quote a number, but if I were to do this, right, you can estimate that, right? That's how much cash is in your wallet. So then where is it? So I get this, that it could be in the underground economy, but another reason we've shown this again is our merchant study. So we ask our merchants, right, do you hold cash? And there's merchants that report non-trivial sums of money that they hold in cash, right? So a really big insight is that if a business has a safe, they hold a lot of cash, right? So it's less storage costs. So, yeah.
I just have a quick question. Does proximity to ATMs increase consumers' usage of cash? So if you, for instance, live in a rural area and you don't have access to ATMs, but if you live in an urban area and you do have access to ATMs, does that increase usage of cash? Do you have any kind of comments on that?
So not in the research we've done so far. They have shown you here, but we are doing that. We have actually We have another colleague, Hector Perez Saez. He's actually done that. He basically looks at the ATM density, and then he starts drawing circles. And then the proximity to ATM machines. And then he looks at bank and non-bank competition. And it shows that there is an effect. He doesn't quantify it yet because the model has to be kind of validated. But it's going through the review process. We want to make sure everything that we send out, it's been vetted not only internally by staff, but by outside experts too. But no, I know it's an interesting topic. So here's a question. If anyone here has access to this point-of-sale terminals and you're willing to share it with us, we can put it into the model. Right now it's very granular, it's very rough, the data we have. We only have it by kind of very large regions, right? So we have to make these approximations.
So there's a question at the back. And then
sure.
First in the back.
Yes. Yeah. So in our 2013 survey, we asked people the different types of venues where they could withdraw cash, at the ATM, at the bank teller, from friends and family, and also cash back. So I think cash back was like $20 on average, right? You need a 20, you ask for cash back. That's roughly the number that I remember from the survey report. Sure.
And when I look at contactless slides, it's really estimated. So in the past 2 years, a lot of time has sort of laid off contactless. So to make sure that combined account for more than 45% of market share for Debit in Canada and launched and now acceptance around Flash. So these numbers have changed so that Interact Flash, which is again contactless,
Yep. Yep. Sure. Yeah, no, I agree with all those points. Actually, I have corresponded with some of your colleagues about this. Well, Eric Chu. And so I agree. So this is always the complaint about researchers, right? On a daily basis, I wear a propeller head. Right? I'm in the lab working away with computers. The data is not as timely as it should be, right? If you really want to get this, this flow data, then you would run a continuous diary. Unfortunately, that's really expensive for the Bank of Canada to do. I know other organizations are doing this on a continual basis. I'd be happy to share with you information.
When is your next diary?
We hopefully, if we can complete the merchants and CITs and the cost study by the end of this year, we can maybe do it next year. Cross fingers. But so what I think is what happens is in research, a lot of times with TSI reports on mostly aggregate data, you get Polaroids. I always view this type of research we're doing as like deep granular spy photos that we get high density. So happy to talk to you afterwards. So, and I'm told to stop.
Yes, so apparently we're out of time. So just join me in thanking Kim.
Thanks a lot. And we're here. We'll be at the booth, so you can come chat anytime.
Excellent.